Fin the Week is brought to you by Indulge, a digital agency built on thinking for the global financial services industry.
Hey, I'm Amelia.
I'm Paul.
I'm Pat.
I'm Russ.
And this is Fin the Week. How's everyone doing?
Good.
Yeah, good. Cheers.
Pretty good, yeah.
Another hot week.
Yeah, it's warm.
It's nice,
I'm
isn't
going
it?
to try and go for a swim after this, I think. So.
Oh, how nice.
Mm.
How nice does that sound? I feel like it's basically like living abroad at this point, isn't it? Like when you wake up and it's like 20 degrees, you're like, oh, it's a bit nippy, isn't it?
Yeah.
And then you have
being
to
on
go to
holiday,
work.
but then, yeah, exactly, yeah.
Feeling
Work
very
gets in the way.
European.
Yeah.
So we're 4 weeks into the Trust Reset, 3 weeks into our Teardown series. This week, we're tackling probably the biggest financial decision that most people will ever make. Before we get into it, does someone want to just briefly explain what these Teardown sessions actually are?
Yeah, I can explain that. So we're picking 3 firms, and we're looking at we're looking at journeys, and how they conform to consumer duty, whether there's anything that is worth flagging, which could put them at risk at consumer duty and conforming to the 4 outcomes of that and the cross-cutting rules. Worth noting as well, we're using our scanning tool, UX Duty, to create those findings. With UX Duty, we can manually put in a list of URLs and set it off on this journey, and it will go through and uncover lots of different things. So we're kind of pulling those out and finding some common themes and going through them.
So that's what we've looked at current account switch services. Last week we spoke about consumer investment and robo-advisors. This week, perhaps the most complicated case, because of all the FS journeys we've looked at, mortgages are probably the most fragmented, because you start at a broker, move to a lender, and then if everything goes through, you land at a servicer for maybe 25, 35 years. Sometimes that's 3 different firms. Is that why we've chosen mortgages next?
Yeah, I think mortgages is an important one to look at, because one of the things that the FCA has highlighted in its commentary around the first 2 years of consumer duty is that firms are perhaps missing, or they're not looking hard enough at distribution chains. So whilst a lot of firms have embraced consumer duty and they're looking at how they engage with consumers, they're not necessarily looking at what about the technology providers that live along the chain. And likewise, those technology providers might consider themselves outside of the scope of consumer duty, when in actual fact, what they're doing does fall within scope. And mortgages is the perfect example, because, as you say, there are sometimes 3 different firms involved in a single relationship with a consumer. And so it's kind of critical that everyone along that distribution chain considers what they're doing. So yeah, that's kind of why we picked it. The other reason is obviously that mortgages is it's another type of financial service, and it's slightly different in that people, I mentioned at the end of our last episode, it's a kind of an aspirational thing in many ways. You know, home ownership is a big deal for a lot of people, and so getting on the ladder is important, and therefore mortgages open up the door to that. So it's something that people are kind of quite keen to engage with. So it's important that the journeys they see guide them along the right path.
So that's kind of why we've chosen mortgages. But let's get into it. What types of firms have we reviewed this week?
So yeah, in terms of firms, it's a similar format to the last couple of teardowns. We've looked at that top tier leading firm, and then we've looked at a kind of mid-tier firm in terms of size, and then a challenger kind of a small tier firm. Although in this case, and you'll see this a lot with kind of mortgage brokers, it's more of like the branding is more of like more of the person's name, of like an individual almost positioned as more of a consultant. So that seems to be a common theme which you wouldn't see perhaps in banking. And
we've gone for brokers as opposed to direct lenders and things like that, haven't we? Because brokers are often a start point for people.
Yeah, absolutely. So it's those firms that would give you a wide range of different options across lenders. I think one of them pulls in information from like 120 lenders or something like that. So they're working with these huge kind of pools of of information. Actually, complete coincidence. I'm seeing a mortgage broker tomorrow, but this wouldn't be the first time I've gone through the process. I've been through the lending process probably 3 times. So yeah, I'm quite familiar with this process, at least in Guernsey. So
Very timely
that's
for you
helped.
then.
Yeah.
You're probably going to chew the broker's ear off, aren't you, about everything you've learned?
Ask if he wants to come on a podcast.
Yeah.
I think I found the colour contrast on your mortgage calculator submit button was non-conformant with weak hag AA.
I probably
They have no idea who they're dealing with.
Yeah. Just sign the form, sir.
I'll probably get the worst deal on the list. Yeah.
I had to search for more than 15 minutes to understand your cancellation policies.
Good luck with that. Good luck.
I was actually thinking as well, before we get kind of stuck into it. These kind of teardowns are good because, you know, all of us like a bit of a rant. This kind of gives us an excuse, and it is important in line with consumer duty. But what might be nice is also a podcast episode looking at all the positive UX findings for these firms, because, you know, with anything design related and UX related, it's much easier to find problems than it is to perhaps all agree on what is a good feature and what really works for the consumer. So perhaps as an antidote to these teardowns, and for our own profiles, we should have a positive UX session as well.
I don't think you'll get many views.
Would you get many views?
No one likes good news.
No.
All right, let's get stuck in.
Nice idea, though. Nice idea. So yeah, let's dive in. Why don't we start with a general overview of the findings?
Yeah. So in terms of overview of findings, so there is a total findings statistic. Just to put that into context, we looked at 6 pages in the journey per firm. So we were consistent with the amount of pages we were looking at. The journey is a bit shorter on this one than it would be for, say, some of the others. And that's just because you normally hit a mortgage calculator at some point, or a contact us. That's normally an information page. We've looked at some of the small print pages as well, various policies that they might have, and just check those against UX duties, check those against consumer duty. It's been 125 findings across the 3 firms. 11 were flagged as high severity. Again, accessibility, really high, 43%. So I think that's kind of in keeping with what we've had before, around about half. Then, yeah, it was actually firm A, which is the bigger firm, had 10 of the high severity findings, which is quite interesting. And we've actually had our first medium risk, because everything's been flagged quite cautiously as high, depending on what's found. So firm A, firm C were high. Firm B came through as medium risk, which was like the kind of medium tier.
And what counts as high severity, Russ?
It can be a few things. So if there's a recurring medium risk issue, that could eventually be flagged as high risk if it's recurring. But it's normally if there's one outstanding kind of non-conformance against consumer duty, really. So whether that's just something kind of, well, what UX duty considers as being, you know, a real kind of breach of the consumer duty regulation. So quite clearly something wrong.
And is there anything that surprises us about these figures? Is this kind of what we'd expect based on, you know, previous weeks?
Well, I think again it's a bit of a surprise that the bigger firm has a lot of the issues. But then I think we've discussed in a few of the podcasts in the past, these startup medium tiers perhaps are a bit more agile in terms of what they can do with their digital platforms. And actually the firm B, I think, has a really amazing looking site, but it's clearly quite new. And modern, perhaps that's why it's medium, because they've really considered everything quite carefully. They probably have a design team a bit more tuned to perhaps accessibility and consumer duty than some of the other firms, which it takes a while to get some of these bigger platforms up to date. I think that has a big impact, unless they rebrand. You know, we know some big banks have done that in the past with more of a splash rebrand. Other brands have a bit of an evolution, which kind of evolve over time. But it is a lot easier for these smaller and medium firms, I think, to have a really amazing looking, modern and accessible website, because they can do that from the beginning.
Paul, Pat, anything else that kind of stands out to you there?
Yeah, I was thinking that it's not necessarily surprising, but it's interesting to see that one of the firms ranked as like medium risk. That's the first time we've seen that. Every other time it's been high risk. And I always thought, is it because these consumer duty rules and accessibility rules as well are such a high bar that nobody ever really hits them? So it's interesting that there is a firm that is doing it successfully. And I was just going to ask Russ, when you were looking at the sites, and it sounds like it was, but would you say firm B was noticeably a more pleasant experience?
Yeah, definitely. You just land on the site and it's just enjoyable to use. The content's really friendly. It's quite clear. Font sizes are legible. Yeah, you can tell as soon as you go through the sites, which kind of is quite reassuring that I guess our tool and also what the outline of consumer duty is trying to achieve is why it works.
So that's how the kind of general picture is looking. Should we get into the specifics? What was the first finding we're going to chat about?
So, I mean, anyone who's gone through the process of obtaining a mortgage is probably wouldn't be surprised to know that the websites beginning of this journey they don't disclose fees and hidden costs particularly well. One of the firms, it was flagged that the fees aren't explained until you have the no obligation appointment. So you kind of have to go down there to find out what the fees are, which isn't in line at all with consumer duty, especially the kind of cross-cutting rules. Firms must avoid foreseeable harm and have that transparency across the life cycle of the product at the beginning, really. So that was a bit sneaky. The other thing which isn't clear, especially on these mortgage calculators, it picked up, and again, both of these were firm A. It only shows the monthly repayment, and you see this quite a lot. If you actually go into your mortgage statement and look at your monthly repayment, you'd probably be quite surprised how much of that is being paid to interest. And if you're being transparent to a customer in terms of what product they're purchasing, really it should tell you how much you're repaying over the term of your mortgage. That should be a lot clearer. It doesn't. They don't really mention things like overpayment and how that can help. They're not really benefiting the consumer and being clear about exactly all the costs involved and perhaps what could result in a better outcome for the consumer, but especially those kind of hidden fees. Early exit charges are a classic one for a mortgage. I think, I've recently looked at our facility letter again. I think if we exited at a certain time, we would have paid 5% of the balance, which could be huge depending on your mortgage. Even if you have a modest mortgage, that's still going to be quite a lot and probably affects your decision making. So yeah, it's kind of these fees in line with consumer duty should be disclosed early. It certainly shouldn't be finding out at the appointment. And I think that was a common theme across the three firms. So that was the first point to discuss, really.
I think we talked a little bit about, in fact, we talked quite a lot over the last two sessions about loans and APRs. And I remember we also talked about the recent car loan scandal where car dealers were increasing the interest rate on loans, and then the loan companies were paying the car dealers extra commission out of the additional interest that the customers pay. And it created this multi-billion-dollar kind of refund. But actually with mortgages, and in that discussion, I talked about how people don't really understand what a loan is. They just see that they can get for £500 a month this particular vehicle, which is the one they want. And they don't really think about the fact that they could get a 5% loan from their high street bank rather than a 12 or 13% loan from a car dealer, and that actually they end up paying £300 a month for the same duration, or or £500 a month for a lot less. I think with mortgages, it's even that point is even more prescient, because mortgages, like, they operate in loans in similar ways, because they are a big loan, but they're amortized, which means that the interest and the balance is sort of split, so that you paying the interest right up front, out of your monthly mortgage payment, the first 10, 15 years of that, you're paying like mostly interest. And then it gradually switches over to mostly capital repayments towards the end. And people don't understand that. And they also don't really understand that a tiny movement in your interest rate, like 0.5% at the beginning, can translate into a huge saving over the duration of the mortgage. And similarly, overpaying your mortgage, if you have an amortized mortgage and you overpay by £100 a month, that £100 goes onto your capital balance, which dramatically reduces the interest you pay as well. So overpaying by even a small amount each month can dramatically reduce the amount of interest you pay over the duration. And there's all these like really detailed complexities around mortgages that can save you an absolute fortune. But for people who don't understand them, so if you're a first-time buyer and you haven't got a massive deposit and you go to a lender and your aspiration is to own a house, that lender says to you, well, 8% because you've only got 20 grand deposit and this apartment's like 300 grand or something. They'll give you a really crap interest rate because they know that person doesn't really understand the mechanics of a mortgage. And as you kind of go through your second or your third mortgage, you start to figure it out. And by the third one, you kind of understand how it all comes together. But I think if users understood how a mortgage worked right at the beginning, how fees worked and how much a small movement in the interest rate can change how much you pay over the long term, I think users would be a bit savvier. It'd be easier for them to like choose a different product or choose a product that's better suited for them.
The other thing that I think's interesting about mortgages is we talk about the idea of like people, vulnerable customers, and some people sometimes are vulnerable because of the situation they're in. And I think mortgages is a great example of where that can happen, because I'm just thinking about when somebody is perhaps trying to secure a mortgage, they've probably found a property that they want. Chances are there's competition for that property for people bidding to buy it. So you're already kind of pressured by time to get the deal in place. And so I suspect a lot of people would be considered vulnerable simply because they feel the pressure of time to make it all work. And as a result, they probably are less likely to pick apart the numbers and really understand what it is they're signing up to. They just see, like you mentioned, Pat, they'll probably see the monthly repayment and think, okay, I can imagine paying that every month. Fine, I'll go. And they probably don't shop around, because comparing mortgages, whilst it's possible, it wouldn't fill me with joy, kind of going through the process multiple times to compare. I think the stakes are quite high, aren't they? Like if there's one place where considering vulnerable customers is critical, it feels like this is one.
Yeah.
You never see on a mortgage calculator. Normally you put in your earnings, you put in how much you want to borrow, how much of a deposit you've got, and then outputs a number of options based on the different products that are available. What you never see is, what if I pay an extra £50 a month on top of the monthly fee? How will that reduce the term and affect the mortgage? And that's actually really interesting, because a lot of people might sign up for a £2,000 a month mortgage or £1,500 a month mortgage. So they could probably afford another £50, £100 a month on that. I would literally shave 8 years, 5 years off their mortgage. So
I think the challenge there is that some lenders don't allow overpayments. Our lender won't. I think you can make one overpayment a year, and that's it, for one monthly payment.
I mean, that's a flag. That's a red flag in its own right, isn't it? Do you know what I mean? That's something that should factor into people's decisions.
So I guess the challenge that the brokers have is having a kind of a system, like a calculator system, which I guess covers all bases, like covers all lenders, because the lenders' terms are so different. And that is a challenge on their side of things. So they can't obviously say, right, okay, and if you overpay, great. And then you kind of put in, I can afford to pay an extra £100 a month. Then you go down there and they're like, but your best option's these guys. And unfortunately, they don't do overpayments. So I guess it's a challenge from the brokers to provide almost a generic overview of what you could have without giving terms from a specific lender. But the overpayment thing should definitely be an article, and perhaps have a separate overpayment calculator, so it isn't confusing, and be like, if your lender allows you to do an overpayment, it can drastically reduce your length of your mortgage. or the interest you're paying, and then perhaps give some examples of products which do provide overpayment terms. And I think then you're reaching a point where you've got really good usability, haven't you? And then it's really clear for the user. And it isn't so much on these. I mean, I think we mentioned that it's very time consuming. It's such a big factor. Everyone's got busy lives. You know, if you're moving property and you've got kids and you're working, and, you know, how much time do you have to have all of these appointments and all of these calls to figure out what to do? And I've always said when we've ever moved, which we've done a couple of times, and the stars need to align to move property. You need to get an offer on yours. You need that secured. You need to find somewhere. You need to get that offer approved. You need to get your mortgage application approved. You need to get all three of those things lined up at the same time while trying to understand all of these products that are on offer. And if you're making the best decision, all at the same time with everything else going on in your lives, that's a real challenge. And I don't know if they play on that and make it quite complicated, or it is just a very complicated process as well, just because there's a big legal aspect to it as well. There's a lot of terms you need to sign for. You have to, you know, your buildings insurance, your life insurance, all this being sorted out at the same time. But they do have an obligation to make it as easy as possible to understand, don't they?
They do. And how much fee disclosure is reasonable, do you think, or possible in these very early stages?
Well, I think you should have it before the appointment.
Yeah. And I think wherever they often in a mortgage calculator, they'll give you the monthly fee because that's the kind of headline. That's what you know you can try and align to in order to afford that mortgage. But really, they should also give you a breakdown of like what is the total you'll spend over the lifetime of the mortgage and how much of that is interest and how much of that is capital. Because if you see the amount of interest after year one and you get your first statement and you look at that and you're like, well, I've paid 24 grand to my mortgage provider and 23.5 is interest. Because that's what your first statement looks like, because it's all interest in the first year. So that, I think it's important to surface the total that you'll be paying over the duration, how much of that is interest, and also make sure the user understands that weighted so that all the interest is paid first, kind of like the chart of interest versus capital goes, which is from interest heavy to capital heavy as you approach the end of the mortgage. And it's important the users also understand that if they can overpay, overpayments are hugely effective because you're taking money off your capital balance rather than just like throw money at interest. It's just giving a more rounded picture of the mechanics of a mortgage in a way that a layman can understand, because it is a complicated thing.
Yeah, it's almost like whether it's reasonable for firms to be able to quote specific fees at the early stage, I'm not sure, but they could certainly kind of prepare people for what to expect. Like, this is what we're quoting. It's going to be the amount you're borrowing. This is how it's broken down. This is how to read your annual statement, that sort of stuff. And it doesn't need to be complicated even. It just needs to be a kind of relatively simple breakdown of exactly what to expect when you get to the point of seeing the numbers.
So should we get into the next finding? What's up next, Russ?
Yeah, so I actually showed the team this one because I was a little bit surprised. And it stood out to me. UXGT flagged it, but then it did stand out to me as a potential issue, potentially even a legal issue. So on the contact a broker form, there's no opt-in or opt-out consent for your details to be used for marketing purposes. You have to email an email address to be removed after you've completed the form. And
this is Firm A.
Yeah, and what was almost laughable about this is that it's also the same on the complaints form. So I could only imagine if you're making a complaint to this firm and you can't opt out of the marketing preferences while you're making a complaint, that would be quite frustrating. The fact that you're having to complete this complaint form and then you're basically then on their marketing list, unless you then email them to get removed after you've made a complaint, you're probably receiving a promotional email. The secondary issue with it as well is that this copy is 9 pixels on mobile. To put it into context, the gov.uk design system was changed to increase the smallest font size from 14 to 16 pixels, I think.
Wow.
Is also the British Dyslexia Association recommend not going below 16 pixels, even on mobile. So yeah, we're talking about a drop of, well, nearly half, which is, if you look at it on mobile, you literally cannot read the letters. So two big issues there that are flagged, and I think there might be a prompt here to ask Pat his thoughts on this, because I know you're pretty hot on GDPR.
Well, I mean, I had to go and take myself off for a little walk after I read this, just to sort of calm down.
Have you,
You okay?
reported it to the police?
Yeah, I've reported it to the ODPA. I've reported it to the ICO. No, but, I mean, it's kind of ridiculous, really. Like, I mean, opt-in checkboxes on forms. The guidance is absolutely clear with GDPR, is that it has to be opt-in. When you fill out a form, if you want to use that user's data for anything, firstly, you need to have a checkbox that says, I agree for my data to be used in line with the privacy policy. And that would be for the purpose that you're filling in the form. So for a mortgage broker, it would be, my data would be used to compare against mortgage offerings and come back to me with possible matches, and that's fine. And then you've got there should be a second checkbox, which is, I agree to be included in a marketing mailing list and presented with offers. And they should both be unchecked. And then the user should tick, the first one, the user would be mandatory for the user to tick that, because otherwise there's no point in submitting the form. That's fine. The second one should be optional. The problem with that from a marketeer's point of view is that maybe 2 or 3% of people will check that second checkbox, which means that, you've got this email marketing list, and email marketing is incredibly powerful, gives you better conversion rates than most other forms of advertising online. And so building an email marketing list, if you can do it, is a really useful thing to have. But if only 1 or 2% of people check that box and opt in, then you're not going to have to build your marketing mailing list. So it's an area that's widely abused. You'll often see uncheck this if you don't want to see email marketing messages, which is a slightly confusing message. Or you'll see don't check this checkbox if you don't want to see marketing messages, which means you just leave it unchecked. But actually that's just confusing because it's a double negative. You see all these weird and wonderful combinations that try and trick you into accidentally opting in, and they're all highly illegal in line with GDPR.
And what would the potential punishment be for something like this?
Well, a GDPR breach is up to £17.5 million, or 4% of global annual turnover.
So why would these firms risk it? Do they think they're just going to get away with it?
I mean, they do. That's the thing. The enforcement of this thing is very rare, which is why it's so widely abused. Probably 50% of forms online have an incorrect kind of opt-in marketing checkbox. And it's kind of impossible to enforce all of them. And those fines there that I mentioned, those are the theoretical maximums. And there are cases where the fines like that have been doled out. Those fines have been to firms like Facebook, Meta, or Google for widespread privacy abuse. You wouldn't get a fine like that for having an incorrectly configured checkbox. More than likely, someone complained about it, that your local data protection office would just reach out and tell you to sort it out, and then you'd fix it, and then you wouldn't see anything else. But I think this example here, where you have to actually follow up with an email in order to opt out, it's kind of ludicrous. And it takes it a step further than a strangely worded checkbox. It's there's no checkbox, and if you want to opt out, you have to email us afterwards. So I think all it would take is for literally someone to complain to the ICO in the UK, and the ICO would reach out to them, and they'd probably correct it.
So it's not looking good for Firm A, and we're staying with Firm A for the next finding, aren't we, Russ?
Yeah, I mean, this isn't perhaps one that they would get a fine for. I couldn't see any information about that anyway, but they just don't have their registered FCA number on the site. And they are registered under the FCA because I looked them up as well. So I think it's just, I think with the theme of this edition as well, it's trust, isn't it? And I think it's how can you convey trust, and that kind of marketing example there is just quite unbelievable, really. Having the trust in that firm seeing their regulated number, having the trust in the firm that they're not taking advantage of their personal details for a promotional benefit, for business gain in that way is really important. So it seems like quite a minor one, but most websites, most regulated firm websites have their number there. And that would just give me it just make me feel a little bit uneasy, perhaps, not kind of seeing it in the footer. So it was flagged by UX Duty as high risk because they could be acting as a firm and not be registered, which would be a huge issue.
And do you think that is an oversight or a technicality for them?
Based on everything else going on their website, I'd probably say that's a technicality.
I was wondering. I'm not 100% sure, but I suspect regulated firms are required to display their FCA number on their site, across the site. But I wonder if it could be an oversight, or could it be that it's one of those situations where they have like one limited company that is like their marketing side, and then another limited company that provides the mortgage services, and technically they're different, and someone's decided we don't need to show it on this site because it's our marketing site. But, when you look at the topic of trust, that would be a poor decision, I would say, because like you said, Russ, stuff like that tells a visitor that, well, this is the real deal. They are regulated. You can look them up. Here's their number. And that's surely an open goal.
Yeah, definitely. I think it seems minor, probably in the scheme of things that aren't included and wrong, but it does seem like quite a major omission from the footer or anywhere on the site, to be honest. I'd say it would set up a red flag for me about whether to contact them. So it's not benefiting them. And like you say, it should be the kind of group, the kind of parent company, if that's the registered firm, and the activities under that are regulated through that registration.
Now, moving on to the next finding, and we're back to this topic of accessibility again.
Yes. Yeah, we're back, and we might be talking about it for a little while. For the next few minutes, I would have thought, and I can actually bake into it perhaps the last finding as well, and just talk a bit about accessibility for a bit. I think it's just because of where it happens, and it's actually firm C, but on the complaints page, the buttons on the page. So when you're filling out when you're making a complaint, they can't be accessed with or by a screen reader because the buttons don't have any names. I think we picked up on that just because of where it is in the journey, and we see this quite a bit. And I'll talk a bit about some of the common findings perhaps that we've found across all of the scans. But when we're talking about vulnerable customers and those who are using screen readers because they fall into that capability category, this really falls short, because this person might be making a complaint about not being able to perhaps use the website or not understand communications, and they're using a screen reader because they might find audio easier to understand than text. And that is another reason why people would use a screen reader, for example. But they can't go through the complaints process because the buttons don't have any names. So it won't actually tell you what the buttons are. I think it's just because where it happens. And, I understand accessibility is hard to implement, but in these key journeys, I think firms really need to make an effort to get it right.
I wonder if because this stuff keeps coming up and keeps getting missed in these reviews that we're doing. And I was trying to think, well, why is it, aside from the fact that it might not be part of a brief, is it because the people building these services maybe don't have experience of what it's like to try and use something that relies upon a screen reader and stuff? What can be done to remedy that? Is the advice that spend a day navigating the web using a screen reader and not using your mouse and stuff like that? Is that a stupid suggestion, or would that actually be a required part of training for a designer?
Yeah, I think that'd be good training. I think I attended it was really late at night because I think it was on like East Coast America, but I attended a course by like WebAIM once. And they just went through all of the aspects of accessibility, including screen readers and best practice HTML. So I think, any designer, especially for a firm, an FCA firm, should should, at least watch that course as a webinar or attend the course, because if you're not using a screen reader, perhaps it isn't something that you would consider. But also there should just be a checklist, and these forms elements on the site, we're not in a time where people would be designing a complaints form. They're using a design system which should be accessible by nature. So all of these form components and all of the underlying code should be accessible out of the box. And then you piece together things like forms, you piece together registration processes using an accessible design system. It's the duty of these firms to make sure their design team and their entire production team understand accessibility and implement it at the core.
It would be good to actually sit, I think it would benefit any designer to sit down with a mask and actually just try and carry out a few common tasks using a screen reader, just to give them a feel for actually like how difficult it can be, and just to give them a feel for how screen readers actually work. Yeah, why not? Like, just try it and it'd probably open your eyes. Excuse the pun.
Yeah. Well, it must be incredibly frustrating if you're somebody that relies on this and you can't access these, very like services that everybody else can. That must be incredibly frustrating, mustn't it?
Yeah.
And I think I touched on just voice over Mac as other like screen reader software. I think JAWS is one, like more kind of popular ones, but just you can do voiceover on your Mac, and you can just try and kind of navigate through a website and listen to what it's saying. It takes a while to get used to, but I've done that before, and WebAIM gave a really good demo of that as well on their course. So it's worth perhaps contacting them and speaking to some of the experts if this is a space that you're interested in.
I think it's in these firms' interest, isn't it? These are potential customers. To sort of exclude these people is just madness, really. And our final finding, we're staying on the subject of accessibility.
Yeah, so this was just one, and I understand not every site needs this, but 2 of the 3 firms had no accessibility statement, which is something which is just best practice to add in. It just explains what you're conforming to, whether it's WCAG or AA. It can just explain a bit about how you've kind of approached it. What was quite ironic is that firm C had the accessibility statement. It said all pages on the site are WCAG AA approved, but USGT picked up on 34 errors across 6 pages. So you have to kind of, you have to do what you say. You have to kind of do what you say in your accessibility statement, and you can't just have it there for the sake of it, which I think a lot of people do.
I was going to say, how important is an accessibility statement to have?
Well, if you're not following it yourself, then it's pretty useless. And it's quite surprising. I guarantee if you went to most accessibility statements on the web, it would say that the site conforms to WCAG AA, and there'll be issues with the site. And there's such a big gap as well. I mean, it's just frustrating, isn't it? I don't have access needs. I have a stammer that I've kind of grown up with, but that doesn't affect the way that I interact with or interface with the computer as such, unless there's perhaps voice commands or something like that and fixed text I need to say. But I think it feels like the whole industry needs like a massive shake up to align with what they're saying in these accessibility statements and to get it right. And like I said on previous podcasts, it feels like consumer duty is there to do that for the finance sector.
Yeah, it's so interesting that the only firm, like you say, that had the accessibility statement was the firm that dropped the clanger of not supporting screen readers via the complaints form. So it's just so, when you look at it, it's so frustrating because none of this stuff in isolation is that difficult to implement and do the correct way, but it just doesn't seem to be a priority. And nobody seems to get on top of it. And I keep coming back to this thought that, is it because people just aren't exposed to just how beneficial getting it right is when you do rely upon it? I'm thinking back to projects that we worked on so it was with a major search engine, and it was building a plugin that helped people to understand content on the web. And anyway, I remember watching the screen recordings of people with different types of challenges using this tool to decode information on the web. Just simply watching them and how they approached certain things on a website just revealed so much that I would never consider. Oh, okay, like that just doesn't make sense. That paragraph there doesn't make any sense, and it needs to be decoded. And I think it has to be required training, doesn't it, for anybody working on this stuff to have some exposure to what it really is like to live with different challenges and just understand why you should actually do these things, and they're not just an add-on to do when you've got a bit of spare time. They're kind of fundamental to the system.
I think you hit the nail on the head there. It's just not prioritized, is it? I think a lot of the time the website build project will fall to the marketing team, and the marketing team's objective is to drive conversions and align with the brand guidelines, which is absolutely fine. Bang on, that is the number one objective. But actually, in a regulated environment, like there should be like accessibility angle. If there's an accessibility team or a customer UX team, like that should be involved deeply in the project as well. And there needs to be a business case for it. And that business case would either be we're going to get fined if we don't do it properly, or if we do it properly, we're going to see 5-10% increase in conversions from these people who otherwise wouldn't have been able to use the site.
The other part of the business case as well, though, I always think is, and I've said this in a previous episode, was that something that conforms to accessibility standards is usually better for everyone, because it just means a site that is built using the simplest code it can and the fewest sort of singing and dancing features is usually easier to use, a more pleasant experience. And so there's almost no argument not to do this stuff, because if you do it right from the start, it's not even any extra investment, really.
No.
Yeah, definitely.
And in terms of validating it as well, I think giving designers and developers perhaps the experience of what it might be like, I think the only true way to validate it, and even above the kind of checks that we're doing, is to validate it with people who have access needs. I'd probably say as part of the kind of quality assurance and the testing process, I've been banging the drum about usability testing for a long time and a user-centric approach. And actually that project you mentioned, Paul, with the major tech firm, where we created a plugin to improve the comprehension of websites. We did 10 testing sessions over 10 weeks with people with varying access needs. And we specifically looked at the bookends. So one of the biggest learnings from that project was, if it works for somebody, if our tool, or if a website, let's say in this scenario, works for somebody who struggles to read text and can only rely on imagery perhaps to understand what's happening, then it would work for everyone else across the spectrum. So testing with the bookends of these kind of systems, someone with extreme access needs to someone with perhaps, not so extreme, everything in between is kind of catered for. So it's having that process as part of the production of these products, where you're actually testing, and it's a half an hour session, it's getting some feedback, it's making some changes, it's iterating, it's validating these websites and products are accessible before they hit the market. And that's really important, because we talk about WCAG and failing checks, but even if you're 100% across the board on WCAG, you still want validation from someone with actual access needs, because they might use it in a different way. So it's that testing, it's bringing people on board, user-centric. It's equality at the end of the day, because digital equality that we talk about, and having those people involved in the process.
Because I remember watching one of the user testing sessions, and the product that we helped to build had a feature where it could use emojis to help communicate what was being presented on a page.
Yeah.
And something like that is so easy to dismiss. Before I watched it, I thought, why does it need emojis? And then you watched it and you saw a person kind of actually interact with it and respond in the way that the emojis actually did help them to comprehend what was going on the page. And you realize that, you've just got no concept of this stuff until you see it in action.
That was a really fascinating example, actually. I remember watching that as well. Something I learned about people with autism from that, or some people with autism from that session, was that actually a lot of people with autism struggle to read emotions from face-to-face interactions. But actually what I didn't know is sometimes they struggle to read emotions and tone from written copy as well. And so adding in the emojis really helps to add some context to the content that they're reading, so they could determine, like if they're reading an article, it would help them to determine whether it's like informative or angry or emotional through the use of emojis, because otherwise they'd struggle to pick up on that.
And all of that came about through the usability testing that we did. Otherwise, we never would have known. If this product went to market without any usability testing, then we'd never really know that feedback and be able to evolve it in the right way. So what I would suggest is that these firms, if they're rolling out new features, make sure that they test them with people with access needs, because they'll come up with better ideas. As a result, it will ensure that when these products go to market, that they're usable.
Yeah. And I was just going to add that it also, I don't have access needs, but that product we were just talking about, I could genuinely see myself using it simply because it just makes the experience easier and saves sort of mental effort in kind of reviewing things. So you end up with a better product for everyone, I would argue, in all cases.
I remember reading level was a big factor in that, and product. Reducing the kind of reading level. So I think we looked at different grades of reading. So you kind of, once the plugin was installed, it would give an indication of what our plugin thought the reading level of the page was, and then you could adjust that in the sidebar to make it a bit easier to understand. Or some people actually preferred slightly harder to understand copy. So they might, because that's just the way they were wired. So it's just having those options, really. From a consumer duty perspective, using plain language and explaining acronyms, though, should be done just as part of the content production. And we've kind of picked up on that quite a few times. But it was a fascinating project and very relevant, actually, to this whole process. So yeah, it's good to discuss that one.
I'm sure, accessibility has come up in all of the teardowns. It will be interesting to see in our final one next week, which we'll talk about a bit more after a game of Jargon Busters. So to anyone who hasn't played this before, I've got a list of industry terms, and each week I put the guys to the test to see if they can have a go at explaining the meaning. How are we feeling about this week?
Hopeful. We've had a couple of good weeks, haven't we?
Yeah, I really don't know until you say it.
So this week's word is stagflation. Who wants to give it a go?
Is that like extreme inflation, where it's completely out of control?
I reckon it's the opposite. It's like stagnation. So it's where inflation stalls. I would guess.
Yeah.
I've definitely heard
sense, to be fair.
If something's stagnant, then isn't it still or not moving? So I'd go with that theory.
So the official meaning is it's a period of high inflation combined with stagnant economic growth.
Oh, okay. So it's combined with the high inflation.
So
yeah.
So I was on the right track.
Yeah.
The
You're
sort
probably
of stagnant
closer.
economic growth piece. Yeah.
Yeah, not too bad there. But of course, we'll play more of this next week. And next Friday's the big one, 31st of July, which is the actual Consumer Duty anniversary, and it's our final teardown. So what are we looking at next week?
So next week we've got protection insurance down on the list. So things like life cover, and it's just trying to look at, again, another completely different area of financial services. The stakes are different. I think it's another area where people will struggle to fully understand what they're looking at. Hard to compare sometimes. So yeah, it's something we wanted to dig into for the sort of final teardown.
Going to be an interesting one, I think. But thank you so much, everybody. Thanks for listening, and we will catch you next week.
Thanks.
Cheers.
everyone.
Bye.
Before we go, it's time for a quick shameless plug. This episode was brought to you by Indulge, a digital agency built on thinking for the global financial services sector. If you're looking for an agency that can specialise in UX and design, production and marketing, then look no further. To find out more, visit indulge.digital. Thanks for listening.